HLB or Leong Bank is the one of the Malaysian leading banks operating under Bank Negara strict regulations with a strong local and regional presence. It is recognized for the wide range of service, stability, and commitment to the long-term goals. On risk governance, the Group Chief Risk Officer and the Board Risk Management Committee oversees credit, market, operational, and ECG risks, ensuring strong oversight and a culture of risk management. In the term of reporting, HLB practices transparent disclosures, integrate ECG factors into the credit evaluations, and continuously improve its governance to keep up with the new threats and new regulations.
My name is Muhammad Zuhali bin Muhammad Azhar. Now we proceed to the review of enterprise risk management practice of Hong Leong Bank Berhad. I will break down to the two categories of risk, which is first credit risk and second liquidity risk. Let's start with credit risk. Credit risk happens when customer or counterparties are unable or unwilling to fulfill their financial obligation, like paying back loans. For banks, this is one of the most common and most significant risks. The main impact of credit risk is financial loss due to default in loan repayment. If too many customers fail to repay, the bank's profitability and capital strength are directly affected. To manage credit risk, Hong Leong Bank has a number of strategies in place, which is strong governance and portfolio strategies, the use of credit scoring models and credit rating to assess customers, proper approval process for lending, and lastly, regular stress testing to see how the portfolio would perform in adverse scenario. On top of that, the bank see opportunity in improving its credit tools, particularly through predictive models that can better forecast borrower behavior. At the moment, the risk level is considered medium and the status is stable. Looking forward into 2025, the credit risk outlook is classified as high. It is because of the probability of default is medium, but the impact is high, meaning if default do happen, they could be significant. However, the bank has conservative lending policy and a strong credit framework to counterbalance this. The proposed mitigation plans include using credit scoring models, conducting annual risk assessment, diversifying the loan portfolio, and performing periodic testing. So even though the credit risk remains a big concern, Hong Leong Bank is well prepared to handle it. Let's move on to liquidity risk. Liquidity risk refer to the inability to fund asset growth, liquidate asset quickly, or meet obligation when they fall due. In simple terms, it is the risk that the bank runs out of cash when it needs it. The main impact of liquidity risk is a funding shortfall, which can affect the bank's ability to continue operations smoothly. To manage liquidity risk, Hong Leong Bank has several measures, which is diversifying funding sources, maintaining liquidity buffers, running stress tests, managing cash flow proactively, and most importantly, maintaining a strong deposit franchise. Because of these measures, the bank has the opportunity to use its liquidity strength to support future expansion and investment. Liquidity risk is currently rated as low to medium, and the status is stable. In the forecast for 2025, liquidity risk is assessed as medium. Probability is low, but the impact is high, meaning it is unlikely to happen, but if it does, the consequences will be serious. The justification is that Hong Leong Bank has a strong deposit base, which provides stability, but external market pressures could still affect cash flow. The proposed mitigation plan is maintaining high-quality liquid asset, diversifying funding sources further, running liquidity stress tests, and monitoring liquidity ratio on a daily basis. So overall, the liquidity risk outlook remains controlled and stable.
The risk management practice for the next risk is operational risk. It refers to the potential losses increasing from inadequate or failed process, people or system, as well as the external event. The risk impact include financial losses, reputational damage, regulatory penalties, and business disruption. At Hong Leong Bank currently assess operational risks such as medium with a stable outlook. To manage this, Hong Leong Bank apply a strong governance via its wing committee, use as operational risk tools such as RCSA and KRI, and conduct a regular audit and staff training. Opportunity also exists through the digital transformation and process improvement. Looking at the 2025 forecast, the probability and the impact are both rated medium at 3, resulting in a total risk of 9, stable. This shows Hong Leong Bank operational risks are well contained, with no major increase in loss event expected. The mitigation plan focuses on increasing cybersecurity, staff training, business continuity drill, and vendor oversight. Next is market risk at Hong Leong Bank, increased mainly from the changes in interest rate and foreign exchange rate and asset price. This movement can influence the bank earnings, capital position, and investment value. The risk impact include lower asset value, pressure on the profit margin, and volatility in financial performance. Hong Leong Bank currently rates market risk at a low with a stable outlook, reflecting its limited exposure to trading compared to the core its retail and commercial banking activity. Mitigation strategy include risk limit, stress testing, model validation, and active hedging. This measure reduce the vulnerability while creating opportunity to improve return to risk adjustment portfolio. Furthermore, for 2025, the forecast probability of 2 and the impact of 3, giving a risk of 6, which is stable. This highlights the market risk is well contained, supported by the oversight tools such as value at risk, stress testing, and monitoring by the ALCO. The ongoing plan is to strengthen the hedging, diversify portfolio, and continue scenario analysis to keep risk under control.
So now we talk about the IT and cyber risk at Hong Leong Bank. The definition, IT and cyber risk refers to the potential for financial loss, service disruption, or data breach caused by failures or attacks on the bank's information technology systems or cybersecurity measures. The impacts are disruptions of critical banking operations, loss or theft of sensitive customer data, financial losses from fraud, damage to the bank's reputation and customer trust. The mitigation measures are robust cybersecurity infrastructure and regular risk assessments, strong authentication like multi-factor authentication, continuous staff and customer education on cyber threats. The opportunities are strengthening digital security, build reputation as a safe bank, enhancing operational efficiency and sustainability. The risk status and level are high due to the increasing digital threats, while the risk status is stable. So now for the risk forecast. The probability is 4, the impact is also 4, the risk level is 16, and the risk status is stable. For the justification, with the rush in cyber threats and digital banking use, IT and cyber risks are expected to remain frequent and have significant impact, but Hong Leong Bank's continuous investment and strong governance keep the risk status to be stable. The proposed mitigation plans are maintain and enhance cybersecurity framework continuously, conduct frequent risk assessment and disaster recovery tests, expand staff and customer cybersecurity training programs, and also invest in advanced cyber defense technology and threat intelligence. So now we move to the regulatory compliance risk at Hong Leong Bank. The definition, regulatory compliance risk is the risk of legal penalties, financial loss or reputational damage resulting from failure to comply with laws and regulations. The impacts are heavy fines, damage to reputation and stakeholder trust, and increased operational costs. The mitigation measures are ongoing staff training in regulatory requirements, strong internal controls and audit programs, prompt corrective action on compliance breach. The opportunities are enhanced reputation for regulatory adherence and integrity, building customer and investor confidence via transparency, continuous investment in governance and operational process. The risk status and level are medium to high due to complex regulatory environment. The risk status is stable through strong compliance and governance programs. For the risk forecast, the probability is 3 medium, the impact is 4 high, and the risk level is 12 high risk. The risk status is stable. For the justification, changing regulations increase compliance complexity, but the bank's proactive compliance management helps control the frequency and impact, maintaining the stable risk status. The proposed mitigation plans are strengthen the compliance monitoring and control activities, implement regular regulatory updates and training programs, utilize technology for efficient compliance management, and ensure board-level oversight with timely reporting and transparency.
Hello, my name is Muhammad Syahmi bin Muhammad Sopi, and now I will explain about the financial crime risk, which could be defined as a bank misuse risk in regard to illicit activities like money laundering or fraud. So the impact here, which is a regulatory fines from BNM, which is Bank Negara Malaysia, loss of reputations, loss of money, and also loss of business. So what is the mitigations measure, which is a regulatory fines and sanctions, loss of customer trust and reputation damage, and last but not least, which is operational disruptions and increase the compliance costs. So based on this, what is the opportunities? So the first one, which is effective risk control, enhance the bank's reputations and improve the operational efficiency. So as the risk level here, so the risk is high and the risk status for the Hong Leong Bank is stable. So based on the risk forecast, which is heat map for financial years ending 2025, the probability here, which is a medium, which is 3, impact, which is very high, 5. So the risk level score here, the probability times the impact, which is 15. That shows the high. So for the risk status for Hong Leong Bank, which is a control. So justifications for the risk forecast, which is a failure to follow the AML or CFT guidelines, can lead to a legal penalty, loss of funds, and damage to the reputations. So again, what's the purpose for the mitigations plan? The first one, which is the intelligence monitoring. So be compliance and strong control. Okay, now I will discuss about the bribery and the corruption risk. So what is the definitions of it? Which is a corruption risk of staff or third parties behaving in a corruption ways, which is a bribe being given or being offered. So the impact here, which is a fine, license suspensions, and the publicity. So the mitigations measure, which is implements the actions of anti-bribery and corruption, which is ABC policies. And the second one, which is a regular risk assessment, like audits. And last but not least, which is a whistleblowing for reporting the unethical practice. So the opportunity is, which is a strong corporate governance, improve the stakeholder trust, and better business relationships. And what's the risk forecast heat map for the financials for year ended 2025? So the probability here, which is a medium, 3, and the impact, which is very high, 5. So the overall risk level score, which is probability times impact, so 15, just like the previous risk. So the risk level here, which is 15, so it considered as high. So the risk status is basically control. So for the justifications of the risk forecast, it is a control by the bank through its IBC programs, regular risk reviews, and monetary staff training. So the proposed mitigations plan suggested that it can be worried to check partners, which is a conduct through the diligence and partners as well as the suppliers. And the second one, train staff, and last but not least, which is foster reporting.
Next, ECG risks refer to issues like climate changes, emissions, and resources that use could impact the bank stability. These are managed through the measures such as ECG screening, sustainability policies, and climate risk metrics and disclosure aligned with the international standards. While the current risk is considered low to the medium and stable, ECG governance also creates opportunities such as stronger long-term sustainability, better stakeholder confidence, and improved risk management. For the financial year ending 2025, the bank risk forecast heat map show a medium possibility but the high impact of ECG risk materialize. That give an overall high-risk rating, require action plans with a short-term and monthly monitoring. To mitigate this, Hong Leong Bank focus on enhancing environmental controls, promoting social responsibility, and strengthening governance and compliance.
I will be presenting for the crisis-related risk. Crisis-related risk refers to unexpected shocks like pandemic, natural disaster, or geopolitical tension that can negatively affect operation, financial stability, and reputation. The main impact includes layoff, weaker loan repayments, liquidity stress, and loss of customer trust. To mitigate this risk, the bank uses business continuity planning, early warning system, crisis communication structure, stronger digital infrastructure, and proactive stakeholder management. While the probability of crisis is moderate, the impact is very high, making this a medium risk but currently stable. On the positive side, managing crisis effectively builds stakeholder trust, accelerate digital transformation, and strengthening long-term resilience. For the summary from the report, for this risk, the probability is rate 2, while the impact is rate 3. This gives risk a level risk of 6, which is medium. Operation and liquidity may be disrupted by external shocks like pandemic, natural disaster, and geopolitical tension. However, with strong monitoring and crisis system, the effects can be contained and kept stable.
Right now, I will explain about the Hong Leong Bank capital adequacy, which is 2020 until 2024. So the overall performance strong and stable, which is a capital adequacy ratios showing some good risk management. So actually, it's always above Basel 3 and BNM minimum requirements. So for the CET1 ratio, minimum 4.5%, and 2020 13.7, and 2023 12.8%. So which is in reality times higher than required, which is a strong quality capital. So for the Tier 1, which is ratio minimum 6%, and 2022 14.5%, and 2023, 13.9%. So the consistency shows a strong and solid buffer for the unexpected losses. So for the total capital ratio, which is minimum 8%, so 2022, 60.7%, and 2023, 50.9%. So about the double requirement level, which is a long-term financial strength, and the trends and the reasons, which is high 2022, which is retained profit and cautious risk management. So for 2023, which is lower loan growth, regulatory change. So the outlook for 2024, the expected improvement with strong earnings and better RWA management.
Now, let's look at the asset quality ratio, which are important thresholds for measuring credit risk. First is net impact loans. This ratio stay below 1% from 2020 to 2024, improving from 0.61% to 0.53%. This shows strong asset quality and effective loan recovery. The second one is loan loss coverage. This reflects how much provision the bank keeps against impact loans. It peaked at 247% in 2021 due to the pandemic, but even at 155% in 2024. It shows a solid cushion. The third one is loan to deposit ratio. Stable around 83.5% to 83.9% up to 2022, then rising to 87% in 2024. Still within Bank Negara healthy range of 80 to 90%. It's showing balanced lending and liquidity. The last one is deposit to shareholders fund. It declined from 6.37 in 2020 to 5.91 in 2024. While this looks like a drop, it actually reflects stronger capital growth, reducing reliance on deposit. Together, this ratio confirms that Hong Leong Bank has kept credit risk at a manageable level while maintaining financial strength.
So now we move to the expected credit loss. What is ECL? Expected credit loss is an estimate of how much money a bank might lose if customers do not pay back their loans. It helps the bank prepare for possible future losses before they actually happens. Purpose of ECL. The main purpose of ECL is to predict and set aside money in advance for loan losses. This makes sure the bank stays financially healthy even if some customers fail to pay. The key parts of ECL calculations are: ECL is formed by looking at three things: probability of default, how likely it is a customer will not pay as agreed; exposure at default, how much money the bank could lose if the customer does not pay; the loss given default, the part of the loan the bank won't get back after trying to recover the money. The three-stage model loans are grouped into three stages, which is stage 1, loans that are doing fine; the stage 2, loans that have gotten riskier; and the stage 3, loans that are likely defaulted or damaged. The use of economic scenarios. The banks use three scenarios, which is base case, best case, and worst case. This helps make ECL more accurate and prepares the bank for different situations. Why ECL is important? Because ECL helps banks stay safe by making sure they have enough money to set aside to cover potential loan losses. It makes loan loss recognition earlier and more realistic by looking at future risks now.
Next, we will move on to the liquidity risk. Liquidity risk is crucial for the Hong Leong Bank to ensure it can meet the obligation without stress. This is measured by the liquidity coverage ratio and the net stable funding ratio, both requiring a minimum of 100%. Hong Leong Bank has consistently maintained a ratio well above for this ratio. For example, in 2024, the liquidity coverage ratio was 126.6% and the net stable funding ratio was 118%. In earlier year, the liquidity coverage ratio peaked above 145% and the net stable funding ratio remains steady at around 126% to 127%. This consistent performance highlights Hong Leong Bank's strong liquidity management and ongoing compliance with the regulatory requirement, ensuring the bank maintains a solid buffer against the funding stress.
For the market risk, one of the key tools is value at risk or VAR. This calculates the maximum possible loss the bank might face over the certain period with a given level of confidence. It provides measurement figures that help manage and set risk limit. Another method is fair value measurement. Here, the bank uses market price to value its assets and liabilities. If price not available, model with inputs like yield curve, volatility, and exchange rates are used. This ensures transparency, compliance, and financial soundness. Scenario analysis is also applied to stress testing, which stimulate extreme events such as a sharp interest rate hikes or currency depreciation. This helps the bank see how risks interact and affect the portfolio. Finally, HLB risk management framework includes regulatory compliance, stress testing, governance oversight, capital buffer, and mitigation strategies like hedging and diversifications.
For operational risk at Hong Leong Bank covers fraud, cybercrime, compliance breach, and business disruption, risks that are increasingly serious with digitalization and tightened regulation. Hong Leong Bank applies the basic indicator approach under the Basel framework, where capital is set at 15% of a 3-year average income in 2024. Operation RWA rose to RM 13.7 billion, up to 5.1% year-on-year. While simple and transparent, this method is less sensitive since it ignores mitigation effort. To manage risk, Hong Leong Bank used tools like RCSA to assess severity, KRIS to early warnings, and LER to analyze past loss events. Mitigation includes strong SOPs, insurance, business continuity support, strict outsourcing control, and regular staff training. The key focus remains building a risk-aware culture and strengthening resilience against fraud, cyber threat, and human error. In conclusion, Hong Leong Bank has a solid ERM framework, keeping most risks stable through IT and cyber and compliance are rising. Crisis planning and ESG boost resilience, but digitalization and regulation demand ongoing adaptation. To strengthen and defense, Hong Leong Bank invests in AI monitoring, stronger encryption, fraud detection, and staff compliance training. Strategic preparedness comes from rising simulations, ESG product, and business continuity planning. Looking ahead, fostering a risk-aware culture and using predictive analytics will keep Hong Leong Bank resilient while driving sustainable growth.